Let's get into our results service now with Theo Loock, who is the CEO of Metair, whose interim numbers came out earlier today. And it says the following. Let me read this to you. It says, Metair has produced a satisfactory set of financial results for the half year ended the 30th of June. Let's get into them now. Satisfactory, when I see that as the first sort of description of results, Theo, it means to me, it means okay, but not quite as good as we expected.
No, I don't think so. For us, it's as good as expected, but with the integration of our Rombat acquisition, we say that we got to do a little bit more, particularly in the second half of the year. And for us, the 26% increase in turnover came from very good strategic input, although the market from a production point of view has been down a little bit, being affected by the euro crisis by about 2%. So 26% is good. Market overall down a little bit, coming from our increase in strategic, and then looking forward to a solid contribution from Rombat, our overseas acquisition, in the second half of the year.
Well, let's talk about that acquisition, because you do focus on that quite a lot, and clearly this is part of your future plans. This is part of your bigger picture, this Rombat acquisition. Can you tell us the background to this one?
Yeah, I think it stems from our technology transfer that we want to do in lead technology that we believe we have in our start-stop battery range. It comes from a technical aid agreement that we signed in 2010 with Rombat, and that's developed in us purchasing the company. And we've successfully sort of completed our technical aid agreement in developing our product range, and now it's putting in the production facilities in place and proving that we can produce those quality product from our European base.
What sort of material impact is this acquisition, the Rombat acquisition, going to have on your numbers? I mean, if you talk about the sort of numbers that we're reporting on right now, in a year's time, what do you expect them to be?
We would expect at least turnover north of 700 million contribution. You would see that we only had the acquisition concluded in the first or the second half of March, so sort of 2 or 3.5 months contribution. And on an annualized basis, at least turnover contribution of north of 700 million.
You talked about the European situation. How serious is that? I mean, we talk about it every day, and we see headlines like we've been reporting on this morning about Angela Merkel vowing to save the euro. But when you get down to a company level, a corporate level like yours, which is obviously dependent on the sale of vehicles and the production of vehicles and the supply of those people that produce those vehicles, how important is the European situation to you? And more importantly, Theo, how bad is it?
At the moment, it's not big in our lives. Most of our earnings are still in South Africa. We only had 147 million out of the 2.5 million generated in the European market, but particularly strong in Romania itself. So it's not significant in our lives yet. We try to de-link it from the economy in the sense that it's a new technology requirement. It's a niche market product that's going to require, because of European carbon footprint reductions requirements that particularly come in 2016. So with our product target, we sort of try and de-link it from what's happening in Europe. But you've seen the effect in the local market that some companies that produce for export into Europe and compete with similar products in Europe sort of pulled back a little bit in the manufacturing of products in South Africa. And that's why you saw a 2% decline in the local vehicle produced in South Africa, including exports. So it's not been a dramatic effect. 2% for us is not very serious.
No, it's not. As you say in your results here, it says local vehicle production declined by 2.1% to 236,000 vehicles from 241,000 vehicles, essentially. But NAAMSA is predicting something a little bit better. 555,000 vehicles is the production. Do you agree with that? I mean, is that a realistic sort of number?
Yeah, I think we're very fortunate. Our South African government has put in a very good support structure, the Automotive Production and Development Program, that's officially now going to full flight from January 2013. And under that program, there's quite a few of the local vehicle manufacturers that are looking at launching new vehicles and even increasing current production volumes in South Africa. So as we say under our prospects, we're going into a critical phase where these manufacturers are looking at using that incentive program to step up their export programs from South Africa, and we're very excited about that.
Yeah, you say in your prospect statement, actually, Theo, Metair is entering a critical phase, and these are your words, as we target the full integration of Rombat into the group and compete for major business relating to future vehicle launches in South Africa. Are these vehicle launches justified? I know we've seen some very robust figures coming out of NAMSA, but can it continue? And also, of course, we've got interest rates at all-time record lows or multi-decade lows anyway, and maybe even going lower. But we've seen it before. We've seen so many manufacturers coming into South Africa 3 or 4 years ago and then disappearing. So what is the state of the market at the moment? As I say, is it justifiable for these new ranges to come out?
Yeah, you know, for us, the big leaders, obviously, it's driven by capital investment. And capital investment in our industry has already happened. So the money has been spent, the capacity have been installed, and the studies are being done now how we improve on the volumes going out. So if it wasn't for the capital investment, and I think the government was very clever, it announced the automotive development program early in that, at the early announcement of the automotive investment allowances. And because that was already implemented 2 years ago, those capital investments have happened, and once they are installed, and we must also realize that the vehicle base that we're coming from after the 2008 crisis was quite low. We're only now back to the levels sort of production similar to what's happened in 2008. So it's taken all of that years in 2008 to recover now, and there's quite a bit of growth projected in the vehicle park to over 1 billion vehicles worldwide in sort of 2020. So we're building on that low base.
One sort of cautious note you talk about in your results service here, Theo, is the entrance of international low-cost manufacturers during the period will increase the competitiveness of this segment of our business. Is this a real threat? And again, how much is the rand involved here?
Yeah, obviously, the weaker the rand, the better for us. And we've seen a little bit of the weakening in the rand. The stronger the rand, the more competitive not only imports are, but also our international competitors coming into the South African environment. Fortunately, the Metair product range, we live off the products that don't travel well, that's subject to customer choice, so you must produce them close to the manufacturing plant, and they've got a high commodity content, South African commodity content. So they involve copper, aluminium, lead, steel, and plastics. And because those commodities are available in South Africa, not so much though the plastics, but the other commodities, that gives us a very strong competitive base in the South African environment. And for us, it's about manufacturing excellence. We are in the international arena, and we must produce competitively.